Welcome traders. My name is Siddharth and today I'll teach you the 3 different ways people trade in India. Let's talk about the first one, the punter or the generic gambler. Now these are the type of people who invest in stocks based on informations they gathered from their friends, their relatives, their colleagues, and just blindly invest in stocks hoping that the stock will give a good return in a period of time. Now the problem with this strategy, it's as simple as it gets, but this in long run will never give you any possible benefits because you're just guessing here or you're gambling with your money here, right? So this is the most commonly traded technique people use in India because they do not have the proper knowledge to do the studies required to analyze the movement of the stock. So the second type of traders is the technical analyst. Now what these traders do is that they understand or interpret the possible price movements of the stock uh, using the historical data or the historical prices of the stock and determine the movement the stock will make in the near future. So this is what I'll teach you, and then we'll move on to the most important one, the fundamental analyst, where people read the balance sheets of the company. They do like internal checks of income statements. They evaluate the performance of the company based on their financial data, the financial statements, and then they come to like a decision as to what the price of the share would be given a certain period of time. So once they come out with the price, for example, let's say I assume the share of XAB company is trading at 100 rupees today, and I estimate that the price of the share using the fundamental analysis techniques to be 120. So for me, the right now the share price is undervalued. So what I'll do is I buy the share at 100 today, expecting the price to go to 120 in the near future, right? So this is the fundamental analyst. So here's what I'll teach you. We'll start with technical analysis, and technical analysis, excuse me, involves stock charting, which involves us to plot the prices of the stock in a chart and understand where the stock is headed in a trend. Is it in an uptrend? Is it in a downtrend? And so on and so forth. Then we talk about pattern analysis. Then we'll move on to candlestick analysis, which helps us understand the possible reversals in the price movement. Then we'll talk about the different types of indicators people use to estimate the proper movements of the stock. Then we come down to the divergence and convergence of the RSI, which is a very important indicator which tells us again for trend reversals or possible reversals of the price movement. Then we'll talk about the Fibonacci series, which tells us the proper entry and exit strategies of the stock that we took a position in. Then there is Gann level, which tells us the time frame within which the possible target that we assumed uh, will reach. And then we also talk about the pitchfork method, and there are many such more methods that we'll talk about or we'll upload videos on so that you get a good grasp of technical analysis. So here's what I'll teach you in fundamental analysis. Now this is a bit more tricky than technical analysis because you require a bit of knowledge in accounts to understand fundamental analysis. Now here what we'll do is we'll start off with balance sheet analysis, which gives us a picture of how the quality of assets are with respect to the liabilities in that company. Then we'll move on to ratio analysis, which allows us to speak about or rather evaluate the current asset ratio, debt to equity ratio, the price to earnings ratio. There's so many ratios that we'll talk about in the upcoming videos. Then we'll do an earnings analysis, or rather read the income statement of the company to evaluate the performance of the company. Then we'll do a future earnings estimation, as in, for example, let's say a company has taken up a new project and we will estimate how the company's project will pay off in the near future. Will it be good for the company? Will it be bad for the company? And so on, right? Window dressing detection is one of the most important techniques fundamental analysts use. Now, what this technique allows us is that, let's say, a small company might boost their net income by uh, reducing their depreciation calculation. Now, what this will do is this will project a higher net income in the income statement, which again would show a better picture of the company than it is. They might use it for inventory, and so many techniques a company might use to window test their financial statements. And it is our job as a fundamental analyst to detect those. After that, we'll talk about stock selection models. Here we build a model based on all the relevant ratios, then earnings, the financial statements, the debt, and so on and so forth. And we build a model where we put or rather test all the stocks available in the stock market and evaluate which stocks fit our criteria. Now, once we do that, we pick those stocks and we evaluate whether these stocks are potential multi-baggers or not. So this is one technique of picking potential multi-baggers in the long run. And there are many such more techniques that we'll talk about in the near videos. Right? Thank you so much for watching. For queries and help required, if any, WhatsApp me at 8910 177001. Thank you.